widely known but often misunderstood topping patterns in charts. And as with all the videos on this channel, I like to use examples to illustrate well-formed Head & Shoulders patterns. We'll start with this one, EFA. And this pattern was back spanning in 2006 all the way through 2008. And this is a very good example. So we have a left shoulder here, the head, and the right shoulder. Now there are several properties about this which make it a particularly good pattern. First, the neckline is well formed. That is, it's well defined with respect to major support levels. Also, the right shoulder is lower than the left shoulder, which indicates a weakening of the stock in general. And the key here is the break of the neckline. When it finally took place in mid-August of 2008, the drop was fierce and quite dramatic. In fact, in the context of the entire history of this chart, you can see the pattern right here, which preceded this astonishing drop into the financial crisis. Now, typically a measured move for Head & Shoulders is the range between the neckline and the top of the pattern subtracted from the neckline. In other words, for simplistic purposes, if this was $20 and this was $30, that's a $10 range. So you would subtract $10 from the $20 of the neckline, yielding a target of $10. Now the financial crisis was so severe that it exceeded even that measured target. But that's the typical Head & Shoulder measured move. Let's move swiftly through some other examples to drive the points home about what makes a well-formed Head & Shoulders pattern and what can transpire afterward. XLU is the Dow Jones Utility Exchange Traded Fund, ETF. And here again we see a left shoulder, a head, and a right shoulder. The right shoulder is somewhat lower than the left. Here's the neckline, very well formed. In fact, this one, on a dividend-adjusted basis, was precisely anchored to this bar, that is 27.57. And it began to pierce that neckline in early September of 2008, and subsequent to that began to plunge rather strongly. You can see right here that it bottomed from that on October 10, 2008. Next example, Hershey's, the chocolate maker. HSY is the symbol. And here we have an interesting phenomena of a Head & Shoulders which doesn't have a perfectly straight neckline. This is a tilted neckline, which you get from time to time. And in this instance, it's a little harder to discern, but you can see the left shoulder, the head, and the right shoulder. Here's the neckline. And this also nicely illustrates phenomena whereby you get a break, and then ideally you get a push back up to the neckline, tagging it perfectly. This point represents the lowest risk opportunity to take advantage of a short position, because it is essentially demonstrated that the neckline has changed roles from support to resistance. And the fact it's already fallen rather heartily also illustrates a potential for weakness. And that played out nicely here with Hershey's, as it fell from nearly $50 and sank down to beneath 40. Rather interesting about Hershey's also is that during this recording, there's another less well-formed but decent Head & Shoulders nonetheless happening, and really only time will tell by the time you see this if this 2014 Head & Shoulders preceded a drop in the value of HSY. More examples. MTH, Meritage Homes. Here we see the left shoulder, head, right shoulder, and a rather complex right shoulder because it actually had two jumps right here above its neckline before it finally began breaking down. You can see illustrated quite nicely here the initial break from the neckline, a push back to the underside of the neckline, almost making it, and then the much more dramatic plunge from there. And this was a particularly huge drop because in this instance the stock fell from nearly $100 down to literally about over 90% less than its peak value. OMG, which has a rather amusing symbol based on what happened, also does a good job of illustrating Head & Shoulders pattern in action. Here we have this isn't as cleanly formed. You can see this neckline is not as crystal clear as the others, but roughly speaking, we've got a left shoulder, a head here, and then a right shoulder. The neckline being based back around 43. And this is an older example. This goes back to 2001, but this preceded, as you can see, a very remarkable and very, very swift drop in the security's value. MTW is our next example. This is Manitowoc, and here's the pattern viewed from this 20-year scale. Zooming in, we can see the left shoulder, the head, and the right shoulder with a neckline at a value of 28.93. We got the initial break, a little bit of a push higher, and then subsequent to that, it was off to the races to the downside. Once again here, a very dramatic fall, running from about $50 a share down to $2.50. NRG is our next example, and here we have a quite interesting push over the long course of time, because here's the initial pattern, after which it fell quite hard, and for years later it fell a long way. And the fascinating thing that's happening at this point is that it finally managed, after literally 5 or 6 years later, to make its way above that neckline, but it still has some import, as you can see, because it has fallen beneath it once again, and in this instance acting as resistance. A couple of last examples of this pattern. This was one of the history's great examples of a Head and Shoulders. This is Broadcom, and we go way back to the peak of the internet bubble here. And this shows how the pattern can be rather tricky, because Broadcom formed a shoulder, a head, another shoulder, began to break down, and fooled some bears here into thinking it was time to short it, pushed away from that into another complex right shoulder, once again dipping beneath the neckline, fooling a lot of people, one last surge of energy, and then finally a gap down on November 7, 2000, after which there was really no turning back. So you can see, based on the very long view, that after that pattern was finally complete, after a lot of kicking and screaming, this stock fell from $170 plus down to about $6. And we'll close with one last example here by way of HOV. This is another home builder, and this is an exceptionally well-formed pattern here. You can see the neckline at the level here of 24.79. We've got our left shoulder, our head, and then our right shoulder. And interestingly, I'll draw a horizontal line for you to show a pattern within a pattern, because in this instance, the head actually itself was a Head and Shoulders pattern. You can see here, left shoulder, head, and another right shoulder. So you can get these very sophisticated looking patterns. And in this instance, the clarity and elegance of this pattern was indicative of the powerful move that was going to take place, because this stock fell from 72 down to pennies at the very end. So that is a fitting and final example of this very potent shorting pattern.